The Vanguard S&P 500 ETF is an ETF that seeks to track the performance of the S&P 500 index. The ETF seeks to provide investors with low-cost exposure to a diverse range of the 500 largest publicly traded U.S. stocks. VOO has a very low expense ratio of 0.03%, which is one of the lowest in the industry.
As an ETF, VOO can be bought and sold throughout the trading day on an exchange, just like a stock.
This provides investors with flexibility in terms of trading and liquidity and allows them to manage their investments more easily than with traditional mutual funds. The Vanguard 500 Index Fund is the industry's first index fund for individual investors, and it seeks to track the performance of the S&P 500 index. The fund also has a very low expense ratio of 0.04%, which is significantly lower than the average expense ratio for actively managed mutual funds. As a mutual fund, VFIAX is designed for long-term investors who are seeking exposure to the U.S. large-cap equity market. VFIAX is one of Vanguard's Admiral Shares funds, which offers its lowest expense ratios and requires a minimum investment of $3,000. VOO's $980.3 billion assets under management matches VFIAX. Both have a similar low expense ratio, VOO having an expense ratio of 0.03% and VFIAX having an expense ratio of 0.04%. Both the ETF and mutual fund have performed the same in the long and short term. Who should invest? Ultimately, both VOO and VFIAX can be good investment options for long-term investors seeking exposure to the U.S. large-cap equity market. Investors who prefer to trade during the day to take advantage of price fluctuations may prefer an ETF like VOO. A more passive buy and hold investor may prefer a mutual fund like VFIAX. Investors using a taxable brokerage account may prefer VOO because tax implications are another important factor to consider. The structure of ETFs like VOO generally makes them more tax efficient than mutual funds like VFIAX.